from all sectors coming back to reestablish their legal base in India. The trend is called reverse flipping. Well, flipping refers to the practice of startups originally based in India tweaking their corporate structure to relocate their holding company and intellectual property to foreign jurisdictions such as the US or Singapore, despite having most of their market, personnel and founders in India. This is mainly done for access to deeper pools of venture capital, favorable tax framework, market penetration and brand positioning as an international entity. Now, Indian startups are now opting for reverse flipping, which is coming back to India due to its favorable economic policies, burgeoning domestic market and growing investor confidence in the country's startup ecosystem. Many Indian startups domiciled abroad have been mulling shifting base to India for a while, or the reverse flipping as we call it. These include companies engaged in fintech, e-commerce, stockbroking, healthcare and edtech. For example, PhonePe, originally an Indian entity, flipped its structure to Singapore but has now moved back to India. Wealth management firm Groww has also re-established its legal base in India. Another e-com player, Flipkart, is mulling reverse flipping to India with an IPO on the horizon. Many such companies are also now looking to come back to India due to what India has to offer. What exactly is reverse flipping? What will be the implication of these companies who are hoping to come back to India as far as taxation is concerned? Let's talk about that. Raman Roy, CMD, Quattro BPO Solution and former President NASSCOM, joining us here on the show. With me is Karthik Malhotra, of course, here with me in the studio. Raman, I want to come to you first. Thank you for taking time out for joining us here on Newsline. What does it really mean for these companies as far as tax break is concerned? Will they enjoy the opportunities that they were hoping to enjoy after coming back, given that they have so far evaded these duties, responsibilities by the way of taxation in the last couple of years?
Hi Shweta, hi Karthik. No, I think, we've got to understand why they flipped. When we talk of reverse flipping, we first got to understand why did they flip, and there were some real issues because of which they flipped. A lot of the companies that you're talking about are looking at IPOs on India, that is listing in the Indian Stock Exchange. And there are various benefits if they are headquartered out of India for them to be able to do the IPO. So while this is great news, and I'm very excited seeing some of the names of the companies that are as yet contemplating, they have not yet done it, but they are contemplating. But I think what we as a country need to look at is why did they flip, and whether we've resolved the issues why they flipped. Some issues I know have been resolved, certain taxation issues have been resolved, and that will allow them to come in. But some issues have not been resolved, like ESOPs. It's a balance. If we want to be the startup capital of the world, which is our desire, then we've got to look at all our policies holistically and work out things that allow these companies to operate equivalent or better than what they would if they were headquartered anywhere else.
All right. This is an interesting debate. I remember, Karthik, you and I having this conversation around when Commerce Minister Piyush Goyal came on record to suggest that you can't just reverse flip as in when you like and leave your domicile nation to go to other countries to enjoy those tax benefits. Raman raises a very important question here. There has to be a reason why they left. The situation wasn't really conducive and favorable. And so therefore, now that it's in their best interest to really come back.
So, I think if I can just put this whole concept in a line or two. You flipped because you saw greener pastures. You want to reverse flip because you're now finding greener pastures. Now, the point is, how much of this greenery that they find either within India or outside India has to do, number one, with their own greed.
Okay.
And at the same time, how much of
but
it has to do...
Isn't it the business of business to make money and profit?
No doubt. But the point is, will the country be open to the fact that at will you're willing to set up base outside while you continue to have your headquarters in India, your employee base in India, your customer base in India, but just to seek some tax incentives and better funding avenues available to you, you decide to list outside? But because the Indian regulations do not permit a foreign company, foreign registered, headquartered company to list in India, you want to come and you want to reap the dividends of the IPO boom. So, so I think, there's no right or wrong answer. You're right. I mean, any business, startup or otherwise.
I do see Raman disagreeing with you.
I think, the business of, Raman, we'll just let you come in. The business of any business is to make money. Wherever you're able to make more money, better money, you decide to flock there or flock back to home.
Right.
What the government is trying to do, to my mind, and which is where I want to bring in Raman also, what the government wants to do is now the government wants to say that, hey, you come back to India, no problem, but we are going to tax you retrospectively. Is that fair for the government? And is the government setting the right or the wrong precedent by virtue of doing that? I think is a larger debate open.
All right. And I do want to throw this question to Raman. Raman, stay with us. It's time for a short break here on this side. We'll be back with Raman and Karthik on the story of reverse flipping. And is it right for e-commerce companies from all sectors to now say, we're finding greener pastures here in India, should we therefore not come back? And for the government to say, we will ensure that you are taxed retrospectively if you do decide to come back. And all of that, of course, is a discussion at this point in time. We'll be back with more on the other side.
Film and entertainment is definitely one of the levers for any country to build its brand.
We are getting global. I feel that we're just on the takeoff.
More and more films are becoming language agnostic.
Content is a universal language.
There's one audience in the world.
Absolutely. End of the day, we all are like brothers who have mutual respect for each other from a different land.
Watch Allu Arjun on Duologues with Barundas. Streaming on News 9+.
वो पूछते हैं कि हम कौन है गालिब, तुम बतलाओ कि हम बतलाएं क्या.
I told him, you do what you think is best, I will not insist.
This and more. Streaming on News 9 Plus. News is now content. Subscribe and get free vouchers.
Film and entertainment is definitely one of the levers for any country to build its brand.
We are getting global. I feel that we're just on the takeoff.
More and more films are becoming language agnostic.
Content is a universal language.
There's one audience in the world.
Absolutely. End of the day, we all are like brothers who have mutual respect for each other from a different land.
This and more. Streaming on News 9 Plus. Subscribe and get free vouchers.
Hello and welcome back. You're watching Business Plus. We're discussing the recent surge in startups from all sectors who are hoping to reverse flip, which is to come back legally back to India, where they're finding more merit to set up a legal base as opposed to being outside the areas, the places they chose, countries they chose about a couple of years back. Raman Roy with me here. Karthik Malhotra continues to be in the studio. Raman, just before we went into break, you were, of course, registering your protest with what we were discussing here, which is the idea of a retrospective taxation, because many of these firms who decided to flip at a time that they were booming and mushrooming saw some merit in moving base abroad to countries like Singapore, for that matter, where they would get better taxation structure, better tax breaks. And so therefore, now that they're coming back, Indian government says, pay up for what you did not pay back then.
So I think, Shweta and Karthik, to say that companies flip purely and entirely because of taxation for their profits would be a fallacy. If you look at the companies, and I see you running the names of the companies, sadly they were and are still loss-making, hugely loss-making. So there is no taxation impact. Okay. We've got to understand that there were other reasons why these companies flipped. And let me give you a flavor of some of these reasons and see why are they coming back. They want to list on the Indian stock exchanges, which is a requirement for them to be headquartered in India. Great, good for us. They want to come back. But why did they go? Their investors felt uncomfortable on the policy environment in India, on the ability for them to take their own money, which they invested in these companies, which grew because these companies did well, and their ability to take out their money at a reasonable tax rate that did not undergo a change.
Okay.
They flipped because they wanted their employees to participate in the upside that they were creating. And in India, if you give ESOPs, the moment they vest, and before you monetize, you are taxed up front. You have to pay money from your own pocket for those ESOPs. So we've got to understand why they flipped to jump to a conclusion that it was only because of taxation and retrospective taxation will bring a boon. Yeah, some companies there may be a boon because they were profitable, but a large proportion of these companies were not profitable. Retrospective taxation ain't gonna bring in any money. If we desire to
But Raman, one of the questions that comes to your mind is that if this is a testimony to the fact that India is doing better today with the current regime, why would the current regime then push for retrospective taxation?
That is exactly the point. It is not only retrospective taxation. It is to sit with these companies. The big four today, without exception, all the big four today have a practice that is independently running of helping companies flip their headquarters overseas. And these guys are making huge amount of money doing that. I sit on the board of some companies that are evaluating flipping. I'm a shareholder in some companies that have flipped and that are evaluating flipping, and some companies that decided against flipping. There are multiple reasons why they flip. We've got to take a view to see where does it pay to be an Indian headquartered company and what can we do to take away that pain for the companies, for the startups to flourish. It is not about the dozen, 2 dozen that will flick back. It is about a few hundred that are trying to flip right now. When they look at the change in the policy framework, they say, okay, it doesn't make sense for me to flip. Let me make one more point for this. I'm a part of the IT industry. All of the IT industry, whether it is TCS, Infosys, Wipro, HCL, we service the world from India. And we were able to do it without needing to flip to another country. Yeah, we had drop-down subsidiaries for billing and local tax purposes, but the headquarters was always out of India. The newer startups started flipping, and without trying to understand why they flipped, I'm an investor in a company which is getting a very pleasing valuation from an incoming investor. We are delighted as an investor at that valuation. But that investor is saying, I will only invest if you're headquartered outside of India, not if you're headquartered in India.
Raman, why is this mindset there? Raman, I agree with you that this mindset in the investor community is fairly rampant. The question is, why is that mindset? Why are investors chary of putting their money in companies which are based or headquartered out of India versus the same company moving base to another country like Singapore or US? Does it tell us that ease of doing business is not that great after all?
Exactly, Karthik. You hit the nail on the head. Because we are too busy congratulating ourselves on the ease of doing business. And these are the signs that we should watch out for and talk to investors to say, what is the issue? And when the investor comes back and says, if I don't have a pen, I cannot take out money. If I have a pen, the TDS is so much. But when I go for the refund of TDS, here are 10 companies that took 4 years to get the refund of TDS, then we look at it and say, oh, okay, I got it. That is the disease. Let me fix the disease. And, you know, take the elephant, cut it into slices, find the solutions, and it will happen.
So, Raman, what should the government do? Because it is in fact trying to discourage companies from flipping in the first place simply because of the fact that if you reverse flip, we penalize you. If you made money by way of either evading taxes or getting a better tax incentive in another country, when you come back, we are actually going to penalize you. So what should the government really do right now for companies that want to come back to India and participate in the equity market? And one more question, I'm sorry, you know, we are running out of time. One more question is, should we as SEBI, as market regulators, also open up to the fact that we are okay to have companies not headquartered out of India to list in India pretty much the way NASDAQ does?
Your second question is a separate question to see, you know, which way SEBI looks at it. The present rule is that they have to be headquartered in India, and that is, so be it. I mean, there are much larger implications than a set of startups for those decisions to be taken. But I'll come back to your first question to what should we do.
Yeah.
And Karthik, you and I have sat on multiple such debates in both our previous lives also.
Absolutely.
And I say the same thing. The government has to talk to the companies and say, what is the issue? There needs to be a dialogue. There needs to be an understanding. You can't say that you are saying this is an issue, but I'm telling you it's not an issue. But I just told you it's an issue.
Okay.
And you can't say that because I'm sitting on a high chair, because I'm the government and, you know, I'm so-and-so in this finance ministry. I'm telling you it is not an issue, but on the ground it's an issue. So we need a dialogue. We need to understand. We need to see what are the investors' issues. There are very large investors that run multi-billion-dollar funds that do not invest in companies that are headquartered out of India. Let's get 5 of them into a room and say, guys, why don't you invest? What change in regulations do you need for us to invest? Our intention to be the startup capital of the world is very noble. But that noble intention has to be supplemented with policy changes that creates what in the election world of today is a very oft-used term, a level playing field.
All right.
We do not have a level playing field globally for our startups.
Okay.
Is that an India-only problem, Raman, or do we also see similar problems, let's say, in US for companies which are China headquartered? They find themselves difficult to do business in US. So is this problem limited to India alone, or is it actually a global illness?
No, so whenever there is no level playing field, it is a challenge. But if you take, you know, just as an example out of the US, if you take the Israeli companies, and Israel is the tech capital of the world, innovation capital of the world.
Yeah.
A large number of their companies are listed on NASDAQ and not anywhere else. And, you know, I have been an advocate to say, if we talk to those companies and we are able to offer them some kind of a, you know, Indian subsidiary or something that can be listed in India, there could be an opportunity, because it is our also talent in this country that can work in those subsidiaries. So the point I'm making is, it is a much larger issue than saying it's retrospective tax, because retrospective tax ain't gonna bring in much, it's gonna bring in peanuts.
Okay, so essentially, Raman, if we were to understand you, you're saying go the discussion route as opposed to going the penalty route, because it's not going to bring any profits to either the government, or is not going to, maybe at the most it'll do is harm the companies who are looking to in fact reverse flip at this point. In your experience, sir, before I let you go, we've run out of time, in many years of company flipping to other countries and now the trend of reverse flipping, do you see policy continuity, some cogent action by the government on ground to bring back some of these interests into India, that these companies are now looking at coming back to India perhaps temporarily, and many companies are also looking to stay in India as opposed to moving out?
Yeah, absolutely. I think the policy framework needs to be looked at. Peter Drucker said there's no point doing well something that should not be done at all. We, as in our policy framework, specialize in doing things all wrong. And then we stand up and say, look how well we do this. But, you don't need to do that. I mean, just my employees, I have a large number of employees that are covered by the ESOP plan. When they have to pay tax till they have monetized, they are in deep pain. They ask for company to give them loans so that they can pay tax. It is so unfair. How can you tax somebody for something that they've not even earned? And, the same happens to founders. How the founders are treated by us, how their taxation is done. So, Karthik, I would say it is not the taxation of the company, but the taxation of employees and founders. Right. That is a big role that it plays in the flipping.
All right, Raman Roy, thank you very much, sir. Pleasure listening to you here on Newsline. Hope to get you back very soon.
Thank you. Thanks, Karthik.
Thanks, Raman.
All right, shifting focus now. In the fiscal year 23-24, China has overtaken the US as India's largest and biggest trading partner. The total two-way commerce between India and China has come in at $118.4 billion. US came close second, with the bilateral trade between India and US coming in at $118.3 billion in 23-24. Now, India's export to China rose by 8.7% to $16.67 billion, while the imports increased barely 3.24% to about $101.7 billion. The trade imbalance is clear and visible. The imports from China are literally 5 times the export figures from India. The exports to China, in fact, include iron ore, cotton, yarn, fabrics, made-up handloom, spices, fruits and vegetables, and that entail an overall of $16 billion worth of export portfolio to China. Our guest Ajay Sahai, DG FIO, will join us very, very shortly. Karthik, of course, here with me. Krishna Kumar also joining us here in the studio. Karthik, this is an interesting conversation. It does really tell you that although there is a growth in export to China, the figure is still far, far lower compared to what we import from China, which is about $101 billion.
I think, to put it very, very simply, Shweta, what is it that India is producing, whether on the goods side or the services side, which China needs desperately, and India is the only trading partner which can supply it? You've really got to scratch your heads and run through a lot of research papers to discover that that list isn't very long. You have very, very few items where China finds it advantageous to import from India rather than build it, manufacture it or serve it itself. On the other side, India continues to be enormously dependent on China-made products and, I hate to say, even China-made services for that matter. So, talk about the biggest story right now for India's growth. We are all really talking about this electric mobility boom which is likely to come and hit India. While we are encouraging Indian companies and as well as global companies to come here and make in India as well as sell in India, a lot of components that go into them actually come from China. Electric mobility, the cars can be made here. Where does the battery come from? And, there are simple answers. Look at iPhones, for example. Apple, we've invited Apple to set up shop, double down on investments. 3 Taiwanese companies operating in India. In fact, one of them already bought by Tata Electronics, one more in the process of getting acquired. Where do all the other components come from? Not all the components are made in India. The iPhones are, yes, beautifully assembled here in India.
The vendors are still in China.
So the problem is we don't have a large enough vendor base which is in this intricate art of really designing high precision quality components which power up the machines of the world or power up the engines of the world. Now, unfortunately, our dependence on China continues to be, no matter what we want to do, fairly high.
Ajay Sahai joining us on the show. Ajay, thank you very much for taking time out, sir. I think we've set the ball rolling as far as, trade imbalance between India and China is concerned. My question to you in that case is, how do we mitigate this imbalance? How do we ensure that India becomes more self-reliant in some of these essential components, parts, goods, services that India is currently importing from China? How do we mitigate this imbalance?
If you look into what we are importing from China, it's by and large telecom equipment, parts of mobile phone, parts of electronics, machinery, To some extent, you can say some of the raw material also, organic chemical, plastic, iron, steel, and article of iron, steel. These 5 segments contribute to roughly 80% of the imports. In some of the critical technology sector, we already have the answer to the PLI scheme. In respect of mobile sector, I entirely agree with the panelists that though of course on the part and component, we have not yet developed the capability. When it comes to the mobile, probably the production figures are very encouraging. In FY21, we are producing mobile around 3,000 crore. Last year, we ended with 60,000 crore of mobile production. Probably in this year, it will touch 1,20,000 crore. Though of course, we need to extend it to the parts and component manufacturing so that the net value addition goes up. So the PLI scheme definitely has been designed to address some of the rising import in critical sectors, and which will address to a large extent the import from China also. In some of the segment, for example, if you are looking into the APIs and others, we are now developing the capability. The first penicillin G manufacturing probably will start production from next year. So to some extent, the dependence will go down. One of the reasons for increasing trade deficit is, of course, the huge imports and not so good exports also. There are market access issues with the exports also, particularly in the pharma, agro and food processing sector and IT and IT-enabled technology, which at the bilateral level is being flagged, and I'm pretty sure in times to come that will also be addressed.
Okay, Ajay, I want to spend a minute on export side, because we were discussing, very interestingly this morning as to where can India do better as far as bridging that trade deficit is concerned. Now, you said that there are challenges on the export side. Could you perhaps help us understand what are the components, products that India is currently exporting to China, and how do we really up that number?
No, in fact, if you are looking into the current profile of export, it's dominated by the raw material. It is iron ore, it's cotton yarn, some of the fruit products we are exporting, some of the spices are exporting, and polymers to a large extent. So 70% of my export is of the raw material, and that's why the value-added export is a big issue, and from that we require market access also. For example, in pharma we have the competitive edge, but then approval of the drugs in China is taking enormous time, and generally in a country, if we get the approval in 6 months' time, in China, it is taking 2 years and sometimes even more than that. So that's also an issue, but from the industry side also, we have to move up the value chain, look into exporting more value-added products to China, and probably that will reflect in better export numbers also.
All right, Ajay Sai, thank you very much, sir, for taking time out. So throwing away essentially your Chinese mobile is not going to do away with the problem, whether we like it or not. But there's another interesting story that is emerging by the way of Apple. Now, Apple's iPhone exports from India has hit a milestone. Exports of iPhones made in India nearly doubled in April to $1.1 billion from $580 million a year ago. In fact, in FY24, Apple's total production in India touched about $14 billion. The company's exports crossed $10 billion from India. Now, Apple aims to broaden its production base in India and targets to make a quarter of all iPhones from the country in next 3 to 4 years. Currently 14%, targeting about 25% of the total production. Krishna, it's not an easy road.
It's not an easy road, but it's a road that's growing very quickly. Let me quickly take you through the numbers, if I may. Facts come first right now. Where are iPhones made in this world? All iPhones consumed by just about everybody. 2 countries make the iPhones for the world's consumption: India and China. The fact that India finds itself amongst the 2 countries itself is a big leap from what it was before. We made 0 iPhones not very long ago. Now we are the only other country apart from China to be making the iPhones. And what has happened is that with the 14% share, from a 100% share that China had, that every single iPhone made was once made in China, it is now down to just about 86%. It was 90%, but then we're all talking about estimates from the kind of numbers we're getting from vendors and manufacturers and everybody. They say already about 14% has shifted. And what that has meant is those $14 billion in terms of the total value of iPhones that get assembled here in India. And what does that tell you? $14 billion of iPhone production, and out of which 70% of the iPhones that are manufactured in India are exported, which is over $10 billion. What does it make Apple? The biggest exporter from India. Apple is already the biggest exporter of electronics from India, exporting in excess of goods worth more than $10 billion. So going forward, we're looking at a stage where Apple will continue to expand its production base in India. And Apple currently, when it started out in 2017, is when Apple first started assembling iPhones in India. At that stage, Apple was making only the entry level and in fact the legacy models, not the new models in 2017. All that changed in 2021-22 when the iPhone 14s started getting made in India, started getting assembled in India. And as Karthik was rightly pointing out, all of this, when we say made in India, we mean assembled in India because all the spare parts still continue to come from China. All the spare parts that go into assembling the iPhone come from China. So 14 to 15% of iPhone production is now in India. And out of that, all of it will mean that going forward, it needs to be up by another 10% for 25%. Already, 1 in 7 iPhones made and produced and sold across the world comes from India. The only difference going forward is that the iPhone 17, which is going to be made in 2025, there's a good chance that all those models will be first made in India and not in China. That will be the next big leap forward, where the newest iPhone model does not get made in China but gets made in India and gets exported from India. That's the next big leap forward as far as India is concerned. But bear in mind, India has competition because the AirPods and other so many of these cool Apple products continue to move to Vietnam as well. So it won't be exactly a straightforward road. India will have to fight for its share to make more and more of Apple goods right here in India.
All right. So India, of course, has competition by the way of other South Asian countries. It continues to be, of course, one of the second biggest maker of iPhones in the world, targets about 25% of its overall production of iPhones from India by 2028. A very ambitious growth path there and lots of challenges that lie ahead. But with that, it's the close of this show. Thank you very much for watching.
India is expected to sign an agreement to oversee the management of Chabahar port for the next decade, making it New Delhi's first venture into managing a port overseas. According to reports, Shipping Minister Sarbananda Sonowal is travelling to